One of the most profound statements of all time comes from Andre 3000 of the group Outcast, where he says, "What's cooler than being cool? Ice cold." Yes, Andre, what is cooler than being cool? The housing market, because the housing market is frozen solid like a slab of ice. Folks, we're seeing the inventory starting to tip. And when I say inventory tipping, we have been under this ongoing narrative from all of the real estate reporters, propagandists, economists that lead all of the narratives around the housing market to keep you in a FOMO pattern, making sure that you jump off the ledge, think about nothing else other than the fact that you just might be paying much, much more if you wait to buy a house in 2025 or 26. You got to do it now. And folks, national news is saying the market is frozen. Indeed, after 2023, last year, we had one of the lowest sell-offs in 30 years. Nobody was buying a house, to the detriment of realtors and loan officers across the nation. And folks, as I start the year in 2024, I myself, your caring host, saw a massive decline in just general chatter in 2023. The amount of people that know I exist and call me to buy a house, I noticed, wow, people aren't trading houses. People that are in my own downline that have sold hundreds of homes across Central Florida, they themselves, 20, 30 more of those people on a yearly basis, pick up the phone and say, "Jared, I'm ready to do something else." Those calls, even for an agent like me, were not coming in last year, but now they are changing. Folks, I'm telling you, in 2024, there is a tiny little bit of a tide changing where people are shedding those 3% super low 30-year fixed interest rates because they're just tired of waiting. And ultimately, in different marketplaces, there are huge opportunities, even in Florida, and particularly Central Florida, where even though across this entire state, there have been massive ballooning in active inventory, a lot more houses, even as pending supply slows down. Folks, this isn't just a Florida narrative, by the way. This massive shift to this block of ice we call the housing market is shifting even on the national scale. And I'm going to show you some crazy eye-opening headlines to hopefully give you some insights on just what may happen in real estate near you, no matter where you're watching this update from in the year 2024. Because folks, something crazy is starting to turn in real estate. The propagandists themselves can't spin it anymore because the data and updates coming out of the housing market, even this month, are so stark that they reveal something much different is happening than what we've all been led to believe in the headlines so far. So folks, is 2024 the year of a great 15% change in price where you live? Maybe, just maybe. But I'll tell you one thing, we are seeing a dramatic change in 2024. And today I'm going to get into the most eye-opening news that's come out recently on the real estate market, particularly that affecting Florida. But towards the end of this video, I'm going to talk about the 3 highest areas of value where if you are looking in Florida, you will be able to find the largest potential for a value purchase across what remains as one of the most contentious real estate markets in the country here in Florida. As we jump into the news, do the host a favor. Please go down below real quick, smash the like button. Let's get started.
Change is coming, my fellow Americans. You will own nothing and you will be happy.
Folks, the top story of today from Redfin. This week, folks, breaking. This is a new, massively different trend than what we've been hearing about for now 3 years. Listen to this. New listings post the biggest uptick in nearly 3 years. But here comes more ice, baby. Ice, baby, from the buyers as they show restraint in the face of even higher interest rates. So, big story, great news. We have more listings across the U.S., which is important. It says new listings of U.S. homes for sale rose 13% year over year during 4 weeks ending February 25. This marks the biggest increase in nearly 3 years, according to a new report from Redfin, blah, blah, blah. Now, folks, if you're no stranger to this channel, you know that this type of headline has been all over for us for Florida for the last 4 months straight. Okay, so month after month, I come on this channel and I say, surprise, 18% up in listings in Florida year over year. Ongoing, the Florida's hottest markets, even like Miami and those in the Southeast in our state that love to say,
"Oh, this market is hot forever. It's never going down."
Florida for the last 4 to 5 months has been top of the market top of the country, highest amount of inventory coming in over prior year. People here are just selling more houses. Now, it is true, a lot of it in Florida, particularly is in the Southwest, and that is where we're starting to see what I'm told from those of you in places like Cape Coral and Northport, Port Charlotte, Punta Gorda. I'm told that a lot of you really came through hurricane repairs and all of this from 2022, got yourselves back in the market. There's a lot of inventory catching up. But in terms of the rest of the country, this narrative has now finally arrived. And even though there is more inventory, I'm sure it's flying off the shelf. Because you know why I'm sure? Because we're told constantly by the economists from National Association of Realtors and all these different places that, hey, you know what? We have super, super duper low sales because there's just no houses. If we had houses, we'd have more sales. That's why we had a 30-year low sell-off, almost 30 years, very close, like 26-year sell-off. In 2023, we had 4 million homes sold. Like a year prior, we sold over 6 million homes. Only 4 million last year. People are quitting the industry because sales volume is down. Now, check this out, folks. Look at this little nugget. High costs push pending sales down 8%. That's a bad combination, okay, folks? So in the same period of time, you have this report saying that 13% more year over year, more people are pushing their homes in the market, which is not hard to believe. You have all these people that we've been told forever, all these 3% interest rates for a 30-year fix, they're never going to let them go. That's baloney because now they're selling them for one reason or another. Maybe it's these people find themselves in this long, mile-long list of layoffs, which the every major company you can think of has hundreds of people slated to kick bricks this year. But for whatever reason, even in my marketplace, people are just calling that weren't calling last year. I mean, I've sold thousands of homes in my real estate career. Over time, you get a pace that every year, a certain amount of people change houses like they change clothes. It's like time to move up, time to move down. Things happen and people move. And last year, deadly quiet. Last 6 months of 2023 were ridiculously weird because people just put themselves on hold. But here's the real problem with this update, folks. You have a 13% climb, but wait, remember, if there were more inventory, there'd be more sales. If there were more inventory, there'd be more sales. That's the way it works. There's just no supply. That's the big problem. Look, that's baloney, and it's pointed out right here. High costs push pending sales, so that's a problem. 13% up, but 8% down in contracts? Okay, so pendings means that you have all these homes go on the market, and now even with extra 13% more homes, there's 8% less contracts than a year ago. So you have a big bounce in homes going to the market and a big slump in people saying,
I'm not in. I'm out.
Why? It's a no-brainer. It's too freaking expensive. It's too high. Price is too high. Ultimately, wherever you are, you have people now saying, I'm going to rent. That's just how this works. If you have more housing going to the market and then you have your pendings drop, you have people saying, I'm leasing. I'm going to lease a house. Simple as that. And folks, here lies the problem. I mean, a lot of people, I've been telling you on this channel for a very, very long time, everybody and their brother says, oh, you know what? You got to have a lot of inventory for a price crash. Everybody thinks that. Everybody always thinks in terms of price correcting that there needs to be months and months and months and eons of supply all over the place. But that is not necessarily true. Folks, even at record low inventories, if you keep having these climbs in active inventory, which you're seeing this even in Florida. Florida is the same boat. I'm in one of the hottest markets in Florida. Orlando, I think if things kind of keep up like they're going now, Orlando could pass Miami. We're going to be hotter than they are. But even in Orlando, in hot markets all over the country, you got weak spots that are glaring and they're in trouble. At NestShare, we list your home for just 3%, saving you $25,000 on the sale of your property. You can trust NestShare to sell your home right and pass the savings on to you. Visit nestshare.com before you list your next home, and don't let anybody you know sell before talking to us. Folks, look at what's going on right here. The daily average 30-year mortgage, it was 7.15% over that period of time. So people going out there and trying to buy a house, 7.15%. Look at this. This is up from 6.92 Okay, so we're up almost 0.25% in a month time. You already have record high mortgage costs to go in and buy a house. And a lot of these markets, I've been telling you, depending on the price range, you could save $1,000, $2,000 a month, $12,000, $13,000, $14,000 a year, just normal bread and butter. Like I make $50,000 a year. What can I buy? People are saving $12,000 to $15,000 in that budget to avoid buying and go into renting. Now, the reason why is what you see here on the screen. Now, here's the other narrative, okay? These interest rates, Jared, they're 7.15%. Look what they were a year ago. They were 6.78%, okay? So what are they doing? They're trending higher. And folks, I told you this last year. I said you're going to see low 7 to mid 7s throughout much of 2024. I told you this last year at the end of last year in November when rates were like 6.5. They had dropped. There was 6.6. So here's the deal, folks. The other narrative that you cannot get tripped up on is this baloney where people are out there saying,
you know what's going to happen? The interest rates are going to come way down soon. They're going to cut those rates. 30-year fix is going to drop, and you know what's going to happen to house prices? They're going to climb even higher.
And folks, that is baloney. And the reason why that's baloney is because the only way you're going to see a 4.5% 30-year fixed interest rate in the marketplace in the future, which you may see it, okay, maybe 5 years from now. But I'm telling you, if we get into a point in time when we see a 4.5% interest rate around a corner, meaning like within the next year and a half, the only way that happens is your marketplace is in such bad shape. Recession and job losses have mounted so high, and people everywhere are putting their house on the market, and foreclosures are through the roof, and people that put tons of money down to get these houses at $100,000 over appraised value and basically doing whatever they had to do in 2021 and 22 to get their house accepted, those people are going to sell and cut their throat to get out, okay? That economy, okay, the trouble economy is the economy that you will see the Federal Reserve and the banking system, government, and everybody else jumping in to save everybody. Look at what was just said at Inman. Look at one of the top industry leaders just said at a national conference this week. Gary Keller, you've probably heard the last name because Gary Keller is the namesake of Keller Williams, which Gary Keller is considered to be a thought leader in the housing market, particularly in real estate, particularly in technology, all these different things. But look what he said this week to a massive room full of his realtors. He said, the Fed wants us to come right up to the border, to the edge, to the precipice of an economic recession. But right now, it's a real estate recession. It's real estate that's in recession. You're in a recession, but the economy's not in a recession. Now, I think what he's really saying is, you're in a transaction business that you only get paid as realtors when a commission is due, when you actually sell something and nobody's selling, nobody's buying. It's not a transaction. It's a frozen market. And ultimately, we're seeing issues in this marketplace. Look what leadership over there predicted further. They said we could come out of a real estate recession and then the whole economy gets in serious trouble. So what he's saying is you could actually see really hard times, layoffs everywhere. Everybody gets blasted with cost and lose their job, and then they have no money to pay for things. So the actual economy at large gets so bad that essentially what I think he's predicting here is you have a train wreck collapse in housing prices to the point we actually start doing business again. He's actually saying, hey, and again, I'm paraphrasing, I'm reading someone else's words, and I'm trying to make sense of what he's saying, but it sounds like, and this is actually one of the partners, it says Abrams is attached to this quote, which I think Abrams is a CEO over there or something. I don't know. You Keller Williams folks, correct me in the comments, but what he's saying is there's going to be a problem. Things are going to get really bad economically in the entire market at large that then emboldens the marketplace of real estate to do transaction volumes again, folks. And folks, that's insightful to say the least. But folks, it's not getting any better for buyers. It's getting worse. And that's what's pulling them back. They're sitting here saying, this is problems. Investors have completely left the market. So everybody that's sitting there championing the fact that BlackRock and all these Wall Street companies are buying up all the houses, that game is completely over, folks. Because if you go out and buy a house now and you rent it out, the payment you get to buy it is way beyond where you can make a profit for what it rents for. Like renting is a massive discount compared to buying. And here's why. Look at the median price. So the median price this year is $366,000. That's up 5.4% over last year. So ultimately, folks, buyers are struggling to take the hit. And look at some of these markets. So folks, look at how much Texas is on the hot seat over here. You got Texas, San Antonio particularly down 5% year over year median price. Look at their pending sales. Pending sales in San Antonio down 30% year over year. Holy cow. But folks, check this out. New listings. Okay, we see all this news. Active inventory is climbing. Where is the active inventory going? What are the top 5 markets that are seeing the biggest glut of listings nationwide? Take a look at this. Dallas, folks, up 36% year over year. Jacksonville, Florida, 34%. No surprise there. Austin, Texas, up 32% new listings year over year. Fort Worth, you got Dallas right here. You might as well have Fort Worth involved. 30% up year over year. And Miami, folks, Miami, all of you in Miami. And I'm not wishing you no harm. I'm just saying, keep your eyes open. Keep your eyes open. You guys are starting to see inventory shift. You're starting to see what everybody else in the state has already been seeing for the past year, particularly like the Southwest, game over, big inventory increase. Folks, Miami is changing pace. Most notable, Tampa's not on here this month for seeing a big glut of bump in inventory. But give it a month. I'm sure you'll see Tampa next month. Folks, listen, I don't care how much inventory comes. I don't care. The problem we have is in the buying side of the business, okay? I've been saying this for a long time. Now it's undeniable. It's really hard to prove when you tell people it's the buyers, stupid. It's the demand side. People are out. It's too expensive for the buyer. It doesn't matter if you increase inventory 20, 30% or you double it. Right now, buyers are out and you're going to see price reductions where you really shouldn't see them because inventory is so low. Man, it's so low. Most of the US, it should still be multiple offers, but there's not. And now, folks, all across the country, it is undeniable. You have full on increasing active supply and buyers are still saying, suck it. Look at the pendings. We are out. We are not buying. And that is going to result in further price reductions, even with inexplicably low inventory. And folks, for everybody who wants to say the marketplace is still not suffering, I got news for you. We just saw core inflation numbers today. I'm not an economy channel, but we have shelter re-accelerating. Shelter cost is one of the major sticking points. Everybody, if you've been watching exactly what's going on with prices of everything spiraling out of control, Jerome Powell must undoubtedly know that shelter cost is sticking, it's holding, and now, folks, it's re-accelerating. It's going up again. And honestly, renters across America can't take much more. You got this new report that says we are a long way off from Powell's golden target of 2%. Folks, could he raise interest rates from here? Could he do it? I mean, I don't think he has the stones. And folks, you're going to have more pressure from the central banks to push this thing and shift it slower to get it more towards recession economy. But folks, look at this story from Zillow as a backdrop of all of that. Look at this. Homebuyers now, folks, they need to earn $47,000 more than 2020 to buy a house. The income needed to comfortably afford a home is 80% higher than 2020. Folks, don't look at this nonsense. I'm sure how you really feel. I'm sure you feel way more economically strong. And all of this is a vibe. Like the idea of a recession is it's a vibe session. It's that the data shows everything's really hunky-dory. And the fact of you're a loser. You gotta reach deep within and feel the economic strength. Stop downvoting how bad you feel in all these economic consumer sentiment reports because you're really doing great. You gotta feel great. Okay. But let's get back to the story. Listen, those shopping for homes today, surprise, need to make more than $106,000 a year to comfortably afford a home. A mortgage payment on a typical U.S. home has nearly doubled since 2020. But folks, rent hasn't. And that's why renting is far more cheaper than buying a house right now. And that's the problem in 2024. Folks, look at this. In 2020, a household earning $59,000 annually could comfortably afford the mortgage payment on a typical U.S. home spending no more than 30% of their income with a 10% down payment. Now, that was below the median U.S. income of about $66,000, meaning more than half of American households had the financial means to afford a home. Your base of buyers, folks, is shrinking because it's not financially possible for them to buy houses. So, folks, what happened, the people at Zillow went over and said, all right, if you need X amount of dollars, because today's interest rates are 7.15 for a 30-year, we just read that on Redfin. Today's median price is now somewhere around $370,000. So what does a person need to make to buy a $370,000 house with 10% down comfortably? Now, comfortably means that you're spending about 30% of your freaking income on just your house, okay? The amount of money that that person needs to make, according to Zillow, is $106,500. Isn't that exciting, folks? You're rich. You got a six-figure income. You can afford comfortably a $370,000 house. Now, I don't know if Zillow ran the numbers. Oh, actually, let's take a look right here. A mortgage payment on a typical U.S. home has nearly doubled since 2020, up 96.4%. To $2,188, assuming a 10% down payment. Home values have risen 42.4% that time, with a typical U.S. home now worth $344,000. Folks, you got to understand, even if our housing prices fell 42%, you have much higher interest rates now. Even if everyone lost every inch of this phony, fake, overnight spike, 2.5 year produced appreciation that just appeared in our housing market because our Federal Reserve, central planners, our folks at the top of the pile, because the people at the top who make these economic schemes that create market tension that accelerated home prices went up way faster this time than they did in 2008, okay? So that cycle is not the same. So folks, I'm saying all that to say, you got a real problem. If the people aren't there to buy your houses, you are going to have problems going forward. Now, each market's different. The popularity of different markets matter. How big the base of buyers in a given marketplace matters. And in Florida, I'm going to tell you, there's specific pockets that I find very interesting in the times that we find ourselves. I'm going to share those with you right now because I told you at the beginning of this video that I would. Jared, you talk so dang much. Get to the bottom line. You know what the bottom line is. We don't need to see a whole bunch more listings in order to see prices collapse. Ultimately, folks, you got the highest amount of active listings in 4 years. Day on market is rising all across the country, and buyer demand, buyers themselves, their interest in the market has collapsed. It is very, very low. Also, allow me to further summarize Florida's future, because even while this headline says Orlando, enter any major metro area for Florida, because I can guarantee you they're probably all stacking up at the top of the same list that Orlando finds itself. Orlando's strong renter demand has it among the U.S.'s most sought-after cities. Now, folks, articles like this is the Orlando Business Journal. This seems to probably stir up investor interest, because if you want to buy apartments or you want to know where to put them, this might be something of interest if you're thinking about that. But look at what the article says. And again, I'm telling you, take me at what I'm saying. This could be any major metro in our state. Metro Orlando ended 2023 as one of the hottest rental markets in the country. And through 1 month of 2024, okay, so through January, little has changed that. Rent Cafe analyzed website traffic data for rental listings from the 150 largest cities to paint a picture of renter preferences this year. For January, Orlando ranked among the most popular places for renters, coming in number 7th in the nation with a rental score of 78. Now again, listen, this is the top 150. The City Beautiful, aka Orlando, was the highest ranking among all Florida cities, with Fort Lauderdale next closest at number 20. Miami weighing in at number 52 with a score of 61, and Tampa comes in at 81. Again, okay, all of the top cities in the country. Now, folks, this story narrative was shaped by these kinds of things right here, okay? And I'm going to tell you, this isn't the truth. I'm going to dive under this for you and actually tell you what's really happening. But what the article went on to say is, despite fewer favored listings of saved searches, Orlando remains a popular choice. Why? Because it's an appealing combination of affordability, job opportunities, and leisure activities, read the report. Folks, that's not altogether the story. The story is simply this. If you own a home, you have to carry the burdens of skyrocketing property taxes, skyrocketing property insurance. Ultimately, it's not a safe bet to buy a house and rent it out. You can go ahead and just continue renting and allow the landlord to cover all of these skyrocketing costs, and you're completely protected. And the sad truth, folks, the real reason why renter demand is so high in Orlando is because home prices are crazy out of control throughout Florida and really throughout the rest of the U.S. This is not a Florida issue, and Florida remains popular. So unfortunately, there's going to be a lot of people looking into the apartment market. We talked a lot about the challenges in the marketplace for real estate, but let's talk about some of the upsides. If you are in the marketplace, you want to buy a home, you want to control costs, you want to possibly find yourself a value, what do you do? Well, I'm going to tell you, number one, if I were looking in Florida, look at heavy Airbnb markets. So look at areas where there's a lot of protection around Airbnb, because right now you are starting to see those folks in the Airbnb market starting to see those taxes getting too high, those insurance getting too high. The earnings from Airbnb, they're down for Airbnb, but they're down for the owners in some places as well. So ultimately, you are starting to see a little bit of an inflection in price around the Airbnb communities. And as such, you can find yourself a great deal, but make sure you are comfortable possibly living in a neighborhood that turns over quite frequently, where the people that live around you might not all be full-time owners living in those homes. They might be people that are coming into town just for the week, enjoying the house, and leaving again. And some people aren't okay with that from a long-term ownership perspective. But I can tell you this, where I live around Disney, there are some fantastic opportunities. I'm seeing fully furnished pool homes at close to 2,000 square feet, 4 bedrooms, fully furnished, selling in the upper 300s range. And that's a price that hasn't been reached in a really long time. Beautiful 4-bedroom townhomes with resort-like amenities in the upper $200,000 price range. Again, that community, a lot of those townhomes were selling in the mid threes just a year and a half ago. A second pocket you would want to consider is higher priced fixer-uppers. So when I'm talking about higher price, I'm talking about 500 to even $1.1 million, $1.2 million, and maybe even beyond there. We're starting to see foreclosures in the state of Florida in the luxury pockets, as well as short sales where people got in over their heads, and homes in that category where there's some sweat equity to be done. You could find some bargains. By bargain, I mean 20, 30, maybe 40% below market, but that's very tough to get, at least in the hotter markets of Florida. But I would say in most resale homes I purchase, I never really like the house as it sits. I'm always having to invest money. If you're going to do that, you might as well get yourself some sweat equity while you're at it and have a nice 10, 15% pad of equity after the repairs you've done. And those are opportunities that are available around the state of Florida, even where I'm at in Orlando. And the number 3 opportunity I would tell you is new construction. New construction are now price comparable to resale homes. That's right. There's a lot of marketplaces throughout Florida and Central Florida where I'm at where you can actually see new construction homes selling for what the resale homes are going for. The only difference, you see those builders throwing in another $20, $30, and up to $50,000 in interest rate and closing cost incentives that the resale homeowners are not providing. That's it, folks. Tell me how you see it in the comments, and we'll see you on the next one. At NestShare, we list your home for just 3%, saving you $25,000 on the sale of your property. You can trust NestShare to sell your home right and pass the savings on to you. Visit NestShare.com before you list your next home, and don't let anybody you know sell before talking to us.